Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live. Today is Wednesday, the 17th of April, and we are now in the last hour of the market. That's the time that I take my trades and see what's going on. I always call the last hour of the market the lie detector of the market. I always feel like the smart money is moving the market where they want during the last hour, and I feel like during the day there's just a lot of noise. So anyway, we're going to see what the last hour brings here. But before we get started, I'm going to have to run the legal disclaimer. So let's just get that out of the way, and then we'll get on to it. So hold tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, now that that's taken care of, let's go to the charts and take a look and see what's going on. As usual, first of all, I want to look at my current trades, and then we'll go on through my watch list, and we'll see if there's anything that we want to take a look at today. So, okay, first of all, let's take a look at AMD. We bought AMD yesterday at the end of the day. We had this nice V2 trigger to the upside. That's when it's a 3-bar combination, but essentially we have this bar here. We had a move down, and then the next day a reversal back up where it closed above the first bar's close. We bought at 27.93 today. Today we've had a down day, and my initial stop on this trade was a close below the 10. So, you always want to keep your losses small if you're wrong, and let your winners go if they move your way. But as you can see, we opened higher, reversed, and it looks like we're going to close below the 10-day. Maybe. We'll see. But if it does close below the 10, I will get out, take a small loss, and then we'll find something better. All right. Next one is IWM, which also had a tough day. I bought here on this day when we broke above the 200-day moving average. I wanted to buy it there, but I missed it at the end of the day, so I got a little discount here. It did go up one day. I phased out of about 12% of my position, but today I'm gonna just go ahead and take the loss on this. We did bounce off the 200, which is positive, but my trailing stop at this point was the 5-day, and it looks pretty likely we're going to close below that. I don't like, when I take a trade and it goes in the money, if it starts going in the money, I don't like holding on to it after it's gone back out of the money. So this was a large bar here, larger than 1 ATR. ATR is the distance between here to here. If I tightened it up a little bit, you'll see this is the 1 ATR channel, 2 ATR channel, 3 ATR channel. So this distance, they're all going to be the same. And this was a larger than 1 ATR move. So I don't like that. I feel like there's some distribution going on there. So if it does close below the 5-day, we'll take our loss. Luckily we did phase out of some for a profit. So it's going to be a net loss, but not too bad. It's going to be manageable. Okay. All right. Coca-Cola. I bought Coca-Cola here on the 9th of April when we had this nice move back up above the 200-day move average. You can see there was well, this day closed below, but 1, 2, 3 days that it tested this 200-day and closed above. And then on the day that I bought it, we closed above these previous bars and the 50-day moving average. And so I have been phasing out ever since. You can see I hit one profit target today for 12%, another one there for 12%, another one right at the top for 12%, which is good. So currently, I'm out of about 40% of the position. I don't like this price action here. This is called a kangaroo tail, where you open at the bottom, you go up strongly, come all the way back down. I'm gonna have to watch and see at the end of the day what's going on here, but my gut feeling here is that I'm just going to go ahead and take it. I don't like the action of this bar. And luckily I did phase higher and higher. Luckily got some right at the top as well. So anyway, this turned out to be a nice trade, but I think I'm just going to go ahead and, unless it closes higher, I think I'm going to go ahead and just lock this one in for good. Okay, LMT. I bought here when we have this nice strong break above the 200-day with a lower high preceding. This low here is higher than this low here, and so I did like that. I like when you have lower highs and then you have a trigger. So this turned out to be a good trade. I bought it here on the 11th. I phased out. I think I'm out of about 40%. You can see I hit one profit target today. I don't really like this action either. You know, we talk about V1s on the buy side. Well, right now this is a V1 to the downside, where we've gone up, reversed. If this closes back below this, the close of yesterday, I'm almost certainly going to just lock the whole deal in. But it was a nice profitable trade. 1, 2, 3, 4 days. Happy with it, but I don't like the action of what's happened here today. So we will see what happens in the last hour of the market, or in the last few minutes. Netflix bought this yesterday when it closed above the 50-day, and you know, the 50-day was my line in the sand, was going to be my stop. Went nice, went our way, certainly right at the beginning of the day, hit one profit target luckily, but then it's completely reversed. So this is gonna have to, I'm gonna have to close this out today and take the loss. But you know, the reason that I like phasing out is for these reasons. You know, sometimes stocks will go up, you'll get out of a portion of it, and then they reverse. So at least you locked in a little profit here to help offset the loss of the trade. But my stop, my initial trailing stop was a 50-day moving average, and we certainly, looks like we're going to close below that. So I'll be taking that off. Nike. Okay, so I bought Nike here on the 12th of April when we had this nice strong move on strong volume. MACD went positive. We took out this previous high, which is a fractal. A fractal is a point where you have two lower highs preceding and two lower highs after. And so, you know, this was a nice setup because of the volume. MACD went positive. We had a strong move. Went over, you know, we took out this fractal over here, and you can see this has been a great trade. So I have phased out of Nike about 47%, hitting these two profit targets today. It's a 66.95. It's you know, the RSI is getting up there, but it hasn't tested the 70 RSI yet. If it were to hit the 70 RSI today and then close below the 70, that would be my signal to just go ahead and get out of the whole position. Right now, as is, I'm probably going to hold on. You know, I'm almost out of 50% of this, and we'll see if we get a little bit more tomorrow. If it doesn't react well tomorrow, I'll probably just go out and get out of the entire position. So we'll see. But this has been a nice trade. All right, here we go. SPY. Some of you have heard me talk about this before, but what I do is I buy right at the close of the market, and then I sell at the open. And over time, since 1993, most of the gain in the S&P has come in the after hours market. Actually, if you would have bought in the morning, sold at the close since 1993, you would be down money. So we know that the market's been up since 1993, and statistically, those gains have all come from buying at the close, selling at the open. And you can see here, I bought this yesterday at 289.92, sold out there at 291.40, and now it's completely reversed. So it's been quite profitable ever since I've started using it. And it's not something that, I just do, seems like a random thing. I mean, there's numbers behind it that most of the gain comes from after hours. So I will go ahead and buy another position today of SPY at the close. And it's been quite a profitable approach. I've traded this for I think 35 trading days now, and it's really been profitable, to say the least. Okay, so those are our positions. Before we go to the watch list, let's take a look at the general market. This is the Dow Jones. It's having problems with getting higher than this previous high back here. It's kind of stalled out. Currently, we're below where we opened, so not super healthy. Doesn't mean it's going to go down, but doesn't mean it's going to go up here. But it is finding some resistance. The Q's opened up nicely higher, but reversed. So it's at 74 RSI. It's still over the 70, meaning that it's kind of in a parabolic move right here. But I wouldn't be buying up here. I just don't think the risk to reward's that good. And then S&P, well, we looked at this because of the trade. So opened higher, reversed quite lower. Healthcare is having a really tough time of it today, and pharmaceuticals, I mean, really having a hard time, which is going to be weighing on that index, on the S&P index. All right, so let's go ahead and take a look at, just give me 1 second. All right, let's go down through my watch list, see if there's anything that looks good today. So Apple does look strong. It's a 75 RSI, just too high for me to buy. I'm just not going to mess with it at this point here. But if you're in it, nice job, and I hope it goes a lot higher for you. All right. Hey, Bruce, how you doing? Okay, let's take a look. So, Apple's strong, but not at these levels for me. AGQ is the double leverage silver. We have a little bit of a double bottom down here, but there's really no buy signal here. We do have a double bottom with a little bit of a divergence, but not a very strong one. A divergence is where when you have a bottom, you have a double bottom, but the second bottom, the strength of the MACD is more shallow than the strength of that first move, which generally indicates a lack of momentum or running out of momentum. So it may be setting up here, but there's no signal for me here right now. Whew. So Amgen really took it, didn't it? Boy, it took it right on the head. So, I actually bought Amgen back here when it closed above the 200. I phased out, and then I got out here when it closed below the 200. So whenever things are below the 200, bad things can really happen. And, good thing I got out there, right? There's no reason to be in this if it's under the 200. So I wouldn't be interested in this really basically until we got back above the 200, or if we had a double bottom divergence and then some kind of V1, V2 trigger. But as is right now, certainly no interest in Amgen. Well, Amazon gapped up higher today and reversed. It's not a great sign, especially at these levels. It's the 69.78 RSI. So because we were higher earlier, it was a 70 RSI, higher than 70 RSI, and now it's lost that. I would imagine there'd be a lot of people locking in gains here because of that reason. So, we were above 70 and the intraday, and now we're at 69.82. So people that were long will probably be watching this towards the end of the day and deciding whether or not it's closing above the 70. If it is, they may keep it. If not, you may see some selling into the close. Okay, here we have Boeing. Boeing did have a nice double bottom here, as you can see, and this is a better example of a double bottom and divergence. But here we have almost equal lows, but you see how deep these red bars are here on this low, and then we rallied, and then you see how shallow these bars are, almost at the same price as this. So that shows a lack of momentum. And actually, you know, that really was the signal. We closed below the 100-day moving average. We closed back above. We did a V2. See how this bar washes out this bar. This bar closed above the close of that first bar. So, you know, that's a combination of signals. Double bottom, bullish divergence, close below the 100, close back above the 100, V1 trigger. I'm sorry, V2 trigger, and that, you know, that was a good move. I didn't buy here, but I did sell some puts, which you know, which I got all the premium for because of that reason. But currently, as we are at where we're at right here, really no buy signal at all. Yeah, Bruce, you're right. Bernie and the insurance. That's exactly what it was. That's exactly what it was. Alibaba, you know, we had this big bar down here on big volume. We were rallying nice today, but I would not be interested in this, especially with this large bar being in the recent past, just 2 days ago. So I would have to have some kind of reset, maybe come down here, wash this out, possibly a close below and above the 50 would be a good reset point, but right here it's range bound. I'm not interested. Caterpillar, like some of the other stocks we looked at today, you know, it gapped up, moved higher, reversed, kind of a topping pattern, kangaroo type of formation. So yeah, I certainly wouldn't be interested in this. I mean, these formations here are making me a little concerned about the market in general. Canopy growth, not doing much. For me to get interested in this, I would probably have to have a break above this 200-day moving, or sorry, this 50-day moving average at the very least, or a retest of the 200. Dexcom is interesting here. What's interesting about this is we have this low, we've rallied. Now you can see we've come to a lower low, but you see how we don't have any red? It's not that it's less shallow than here. There is no red. That's called the missing right shoulder. Dr. Elder, that's his approach, but he calls that a missing right shoulder. Now, it doesn't mean just because you have a missing right shoulder that you want to just go ahead and dive into this. If it were me and I was, you know, wanted to buy this, I would wait until we close back up into the old range. Currently, right now, we've broken down into a new range. But in order for me to be interested in this, I would have to have it close back up into the previous range, and it would have to be above a 30 RSI. So if that happened, that's two signals: back up into the old range and a close back above 30. Don't know if that's going to do it today. But you know, I'm actually going to do the numbers on this real quick, just in case that does happen. It's not too bad. Usually on these deep, kind of under 200-day moving average kind of situations, it's more of a counter trend trade, and I would usually take a half position instead of a full position. So let me just work these numbers real quick. All right, so we'll keep an eye on Dexcom. All right, just give me 1 second. Okay, eBay. Well, yeah, that's why, you have these big, large bars. You have a tendency to rally sometimes, have a counter rally, maybe back to about the halfway mark, and a lot of times it will just roll over. So this is just very unhealthy and not going to be interested. That's 420, Bruce, not 429. Just saw that. That's right, 420. So this is the 3 times leveraged energy ETF. Again, gapped up, reversed, just not very positive on the bull side. Etsy, I was watching Etsy. I was going to see how it was going to react around the 50-day, but this is not what I was looking for. I wasn't looking for a huge, larger than 1 ATR move below. At the very least, this would have to close above the 50, but I don't like this large bar. Usually I just don't like to get involved with large bars. I mean, there's exceptions, and when they come, I'll lay it out, but yeah, this isn't very positive. Facebook went higher, reversed. 65 RSI, it's just too high. Five Below is a monster. It's just moving high, isn't it? It's just going up. That would have been the buy there above the 50-day moving average. Oh yeah, Five Below. We're looking at it, Bruce, right here. That's been, it's been a monster. Too high. Swiss franc is getting beat up again. We're near the 30 RSI, near the 6 ATR channel. If it closed back above the 30, it'd be a possible buy, but it's really weak. It's really weak, so no interest there. Gold, it's down around the third ATR channel, 35 RSI. I'd like to see that stab down, reverse, do a V1. That might get me interested. Or waiting for a 520 cross, which looks from this point would be a long time in the future, so no interest there. Google did break out of this range, it looks like. Let's take a look. Yeah, but it's a 68.59 RSI. Just too high. The risk to reward ratio is not good in my opinion, but who knows, could keep on moving. Goldman Sachs, big day today, but I would have to see this close above the 200 for me to be interested. But if it did close above the 200, I might be interested with the stop back below the 200. A small loss if I'm wrong. It's a 62, almost a 62 RSI right here. We had, well, this is the equal low, not a higher low. Yeah, we'll see. We'll see how that works at the end of the day. HCA, we talked about that yesterday, and a lot of times when you have these big bars like this, you'll have, the next day you'll at least have some follow through. But at least we've had some follow through and some and a little bit of reversal here. But it's a 23 RSI. Yeah, I'm definitely not interested in this. The Bernie thing today with the insurance comments that he made is really hurting healthcare. Biotechnology, same thing. That's why it's getting hurt. It's a 33 RSI right here. It looks like it went below the 30 or close to the 30, closed back up, but a person could buy this here if they wanted to. I think the most you're going to get out of it is maybe here to halfway of this bar or to the 100-day moving average. But you see how this is lower than this and this is deeper than this? So that's the opposite of a divergence. That's a convergence. So yeah, I'm not interested in this. Intel, boy, had a big strong day today, although it did give up a lot of its gains. You know, that's a little toppy kind of pattern for me, but at 76 RSI, yeah, I'm not interested in that. The Russell, we talked about the Russell yesterday. I'm sorry, earlier today. If it closes below this 5-day moving average, I am definitely going to just go ahead and get out. I did buy it here, did take some profit, but I've given back. And like I said, when I enter a trade and it goes positive, the worst thing in the world is it for them to go negative and you to hold on to it. You know, I think, you know, it's possible that you could use the 200-day moving average here for your stop. I mean, there's two options there, one the 5 and one the 200, but I just don't like this big bar here, and that's why I'm just going to let this go. Johnson & Johnson, boy, that's some volatility there, isn't it? Big gap up yesterday, went up, went down. Today, went up again, gave back a lot of it. Kangaroo tail on Intel. Yeah. Well, if it got back down here, Bruce, if it got kangaroo tail is really doesn't have to be exactly even, but the more even they are, the more of a true kangaroo tail it is. Okay, so Johnson & Johnson, no. Coca-Cola, we talked about that. Bought this here at 46.63. This has been a nice trade. Really glad that I phased out and got almost the top today. So most likely I'm going to be just locking in the entire profit on this move. You know, another option would be wait for a close below the 200, below the 100-day, but I just don't like this action here. And it's been a nice trade. So I'm going to go ahead and lock that in. Lockheed Martin, well, it's doing better. You know, we talked about this earlier. I bought this here on the 11th. I phased out, hit one phase out today. The RSI 6186. It's still, you know, it's still not extreme, into overbought. So I think I'm probably going to keep this unless we close below yesterday's close, which would make that a V1 to the downside. So let's mark that there. If we close below this red line, I'm just going to go ahead and lock in this profit. It was a nice trade. Let's take a look here at MasterCard. Take a look real quick at something. Okay, MasterCard's moving up, but no signals too high. Altria, kind of moving sideways there. Had a nice move off of this 200, but at this point I would probably wait to see if we could break back above here or look for a dip back to the 100-day. Merck, big day down, along with all the rest of the pharmaceuticals and healthcare sector. Microsoft up a little, which is good, but no real setup there for me, just too high. Netflix, we talked about that. Bought that there yesterday, hit one profit target, almost hit the second. I think I missed it by like 5 cents, and then reversed, but we'll be getting out of this because of the loss of the 50-day and the bad price action. Nike, we talked about that. Going to be keeping that, phased out of 2 today. Philip Morris has earnings tomorrow. This isn't that bad of price action today when we've gone below the 50 and to close back above. That's not bad, but then we have earnings tomorrow morning, so you don't want to get in, you don't want to get right in front of that. PayPal. Yeah, it's tempting, Bruce, isn't it? It's tempting. We'll swing back around and look at those before the end of the day. Q's gapped up, reversed. Not a very healthy sign. A lot of people that are in the Q's right now, they'll wait for a close below the 30 to get out. So, as long as this can hold above the 70, that will keep some sellers at bay, but we'll see what happens. Square. You know, if this closed back above the 200, that may not be a bad risk to reward ratio, or the 5 closing above the 20. That would be another legitimate back tested signal on square, but at the very least, to close back above the 200. SSO is the double leveraged S&P. Again, gapped up, reversed. So these are bonds, and you know, it's starting to hold, it's starting to build a little bit of a range here right at the 50, which is positive. You know, if we went down tomorrow and reversed, if we had a nice V1 or V2, let me show you real quick over here. So this is a really good example of a V1 where we move higher, we move sideways, we stab down, and we reverse. You see how we closed above that prior close? So if we look at TLT, if we could move sideways a little bit more here, do that same thing where we stab down, reverse. You know, when it stabs down and reverse, it shows you that you have some support down here. It shows you that you don't, there's not a lot of sellers down there. And, you know, and that's a comforting fact if you want to get into a long position, that something's been tested and rejected. You know, it's a big part of how I trade. Rejections to see if a price level has been rejection, and then going the other way. But right now I would need some kind of washout and reversal. Tesla, yeah, nothing really here. We're under the 200, I'm pretty sure. Yeah, so whenever things are under the 200, I get a lot more picky. So at this point, really nothing to do with Tesla today. Natural gas, boy oh boy, big down day today. It's under 30 RSI. You know, it's consideration for a buy might be a close back above 30 in the coming days, but even at that, you're probably going to go maybe to a 50 RSI. It's, you know, this is a certified downtrend. So in certified downtrends, you do have rallies, but it doesn't mean it's the bottom. I mean, you might have a rally back up here before it comes back down. So, you know, at the very least, on natural gas, you would want to see it close back above the 30, but not that promising to me. United Healthcare Group, well, it has shown, you know, it did go down big today, and then it did have a nice reversal, which is good, but not in front of these big bars. You know, close over 30 maybe, but even then, if it closes above 30, you're probably going to about here before you head back down or test that low. So, you know, these are all pretty scary. Oil. You did have a V2 here, but it's right up in this high range up against this third ATR channel. You know, about 85% of price action fails at the third ATR channel. It didn't here, moved right on up, but it's more of the exception, not the rule. So, you know, for me to be interested in the oil, I would have to see it move sideways, spike down, reverse V1, V2, you know, either maybe here at the 1 ATR, the 1 ATR channel, or possibly at the 20, or a close below the 200 and back over would be what I would be interested in for oil. Dollar is moving sideways. Oh, just give me 1 second, please. Dollar's moving sideways. You know, it had this nice move up, moving sideways, consolidating again. I would need some kind of move to the downside that was rejected, moved back up, down into this area would be good, or in the 50 RSI range would be good as well. Visa. Inside bar, 71 RSI, again, just too high. I need a better risk to reward setup to get involved in this. You know, maybe if we came back down here to the 10-day, move sideways, stab down, reverse, that might be a good possibility, but not right now. VIX is down 5 cents. It was up much. It was up stronger earlier in the day. Did trigger a V2 intraday. See how this bar washed out that bar, and then this bar at one point was above this close. I'd like to see it. Generally, I wait for it to close above, for it to actually close, but now it is untriggered. Boy, a lot of volume there. Let's take a look at that intraday. These are 39-minute charts here. So this morning, open lower, moved up strongly on strong volume. We're about halfway of this range now. See this big bar, this halfway is going to have some support. We moved up and, you know, looks like it almost pegged it exactly. Doesn't mean it's going to continue to go up or down. Doesn't mean anything, but in general, there is some kind of support in this range. So we'll see how it plays out. But VIX is a very, very difficult to trade. Okay, this is a perfect example of moving sideways, reversing. So we moved up, we've consolidated, now we've spiked down. Now, if tomorrow if tomorrow's bar came up and closed above this, that would be a nice. There's a little lag, Bruce. So fractal on. Let me know what you think what the fractal was on, and we'll look back at it. But I'm not sure what chart you're talking about. I don't know if it's Verizon or back on the VIX. But with Verizon here, you know, moving sideways, stab down. If we had a reversal, that definitely would interest me, especially because it's within the 1 ATR channel and the -1 ATR channel, and MACD is 40. I'm sorry, RSI is 48. So a move back over would put us back over to 50. Those are all good things, but we have earnings coming up on the 23rd. So if it did move up and trigger a V2 tomorrow, yeah, I would buy it and hold it for a couple days into earnings. But again, always we need to get it out before earnings. XLE was one that I was looking at as a possible buy if we closed above the 200-day moving average. And earlier today it was there, but not anymore. So we have higher lows. This low is higher than that low. This low is higher than that low. That is bullish. We're at a 57 RSI, which is neutral. It's not overbought. V1 to the downside, that's not really positive either. So for me to be interested in XLE, I would definitely wait for a close back above the 200 at the very least. Real estate. Look at real estate, Bruce. Yeah, I've been bearish on real estate for the last couple weeks. I didn't short because my tendency is not to short things, but yeah, would have been a good short somewhere in here. But anyway, you know, if we look at this now from the long side, yeah, we did test the 50-day and we're closing back above the 50, but you know, it depends on the context of the chart whether or not that's really something that you would buy. If the bars were small and moving sideways and went down and reversed, then I would be interested. But I'm not interested in buying this because, one, yesterday's bar was huge, and today is a big bar also. Remember, the distance right here from here to here is an ATR, here to here is an ATR. See how this bar was like almost 3 ATRs, and today's bar was close to 2 ATRs. So yeah, I'm not interested in this. This needs to settle down, move sideways a little bit, and you know, maybe in the future, but this needs to settle down before I'm interested in it. Whew, 2 big days on healthcare. Boy, that is nasty. 25.29. Again, in order for me to be interested in this at all, it'd have to close above 30, and even then I would be targeting probably a 30 to a 50 RSI, just a counter trend move. Not that this is the bottom. I mean, you know, this is a big move to the downside. This is, I'm not saying it won't rally for a couple days after, but I think long term it's not positive. Transports, this would have been a good buy right here above the 200. It's moved up nicely, 64.81. So anyway, So let's take a look and see what our candidates are for today. I don't think we have very many. I mean, there's a couple that we marked, but yeah, this one would have to close above the 30 RSI. Right now it's 29.74. You know, I keep talking about the 70 RSI and the 30 RSI, and you know, 30 RSI is a oversold level. 70 RSI is a overbought level. You know, there's buyers that hang out at those levels. They wait for those levels. They'll wait to buy at the 30. They'll wait to sell at the 70. But if it closes under the 30, there's also sellers waiting to short under the 30, and there's also buyers waiting to buy over the 70. So, you know, right now, for instance, on Dexcom, we're at 29.71. There's probably people in here shorting this right now because it's under the 30, and then they'll stay short unless it closes above the 30. There's buyers that are waiting for this to close above the 30. So my point there is, if we close above the 30, shorts, you know, it's likely that there are shorts that will wait until it closes above the 30 to get out, and there's buyers that are waiting above the 30 to get in. So if we close back above the 30, you have two groups of buyers. You have short people having to buy to cover their position, and you have new, fresh buyers. Now, if we're up at a 70 RSI and people are waiting to buy over the 70, then if it gets above the 70, then some people will buy. But if it goes from above 70 to below 70, then you have two groups of sellers. You have the people that bought over the 70 who, when it closes below, they get out. And then you have people that are waiting to short, but they're not going to short over 70. They're going to short under 70. So that would bring in two groups of sellers. So it's a good thing to know, you know, whether when you're at the extremes, kind of what's going on. I mean, just a number doesn't mean anything, but it means something because you know what groups of buyers are going to do there and what they're going to, you know, buy there or sell there. I hope that made sense. I was a little discombobulated. Let me take a look right here. What's going on with the positions? Okay. So it's possible Goldman Sachs can get up there. We'll just have to wait till the end here and see what happens. Do you see how we closed here on this day and we gapped down? You know, whenever you have a gap down or a gap up that's filled within the next 3 days, like it was here, here's the gap, here's the low of when it gapped. It's closing back over that gap within 3 days. Yeah, you're right, Bruce. 50 is another RSI level. Thanks for pointing that out. The 50 RSI is another level. So if you move up 50, 60, and it comes down, it's kind of an invisible support level where people are going to step in and buy. That's if it's going up and then coming back down to the 50. If you're going down, like from 30, then you're going to have another resistance level at 50 above you. So if you're in an uptrend, the 50 RSI there's going to be some support there. If you're in a downtrend and you go from 30 to 50 or 40 to 50, that's going to act as resistance. So yes, 70 RSI acts as resistance above, 50 RSI acts as support or resistance depending on which way you're coming from, and the 30 RSI acts as support on the way down. You know, there's an invisible group of buyers there, and a lot of times you'll see stocks get to a 30, hold there, and then just crash. And the reason it crashes and goes parabolic is because those buyers were not strong enough to keep it up, and they just threw in the towel. So that exasperates the selling pressure. Yeah, really good point, Bruce. Thank you. TLT, we talked about that. We need that to move back down. close back up, and it's possible that the energy sector, so I don't think we're going to be getting any of these trades. Dexcom, it's possible Goldman Sachs. Let's see, the Goldman Sachs level is at 207.45, so that will be the level that I'll be looking for. TLT, I just don't even think that's in the mix. And XLE, 67.65 is the 200-day moving average level. So yeah, that's possible. So what I usually do is I put a star next on my notepad to the ones that look possible. You know, just a good tip, whenever you're trading like this, it's always important to, I have 2 notepads, so I know exactly the levels at the end of the day that I'm either going to buy, I'm either going to sell. I write down I'm going to sell AMD if it closes below this, because I try to trade right there to the last minute of the market, and maybe you have 2-3 things to do. It's important that you have it laid out clearly so that you don't freeze and not do it, and not make the trades that you're supposed to make. Okay. Just give me 1 second. Give me about 10 seconds. Okay. Yeah, I think Goldman looks like a little stretch, Bruce. Yeah, it is a little stretchy. It is a little stretchy. I don't think it's going to get there anyway, but we'll take a look. We'll take a look. Okay, so let's see. Speaking of writing down what we need to do. So AMD, it could be a photo finish here. So sell AMD, close below. The 10-day moving average is at 27.59. Now it could go right back up tomorrow, but you've got to have that line in the sand where you just say, hey, I'm right, I'm wrong. And right now this is telling us if it closes below the 10-day moving average that we're wrong. So it's important to follow your rules. Sometimes they're frustrating, but really the way to be a profitable trader is not to focus on the money, but to focus on your process. And what I mean by process is how you go through your charts at night, your notebooks, what you put down, the notes that you put on your charts, the way you face out. If you really just focus on your process, the process of trading, taking good signals, getting out when you're supposed to, just the literal process is what's going to make you a profitable trader. But again, you have to have good trading principles, small losses, small wins, large wins. At the end of the day, that's what you need. You can't have large losses and small wins. The math doesn't work, obviously. Dog chores. What does that mean, Bruce? Okay, so I've written down here, advanced micro devices, sell below 2760. 2760, yeah, that's the 10-day EMA. 2760, so that's right here, just right at the end of the day. I know exactly what I need to do. IWM, I'm going to sell IWM unless it closes back above the 5-day moving average, which does not look likely. Well, now Coca-Cola is a little bit more difficult. 64 RSI. Oh, let the dog out. Yeah, you're right. You're right. This is closing in the bottom half of this bar. We've got about 50% left of this. Did break out of this fractal. Okay. I think what I'm going to do is I'm just going to use a close below the low of this bar as my stop. Earlier when it was down here, I really didn't like it, but now that it's moving up a little bit, probably going to hang on to that for one more day. So right here, we'll just put sell Coke below, and we'll use the 100-day there, 47.22. All right, these last 10 minutes sometimes get a little rough, everybody, because I'm having to do math and take a look, but I imagine you guys are probably happy to have me stop talking for a second. So, all right. Okay. So Coca-Cola is to be determined. If we close under there, I'm probably just going to take it. Lockheed Martin, we already discussed. We're going to sell that if it closes below. Sell LMT below 310.10. And that is pretty close. That is pretty close. We're going to sell Netflix below the 50-day moving average, which is 354.14. That looks very likely that's going to close below there. Nike, we're going to hold on to that. So it's getting close to the 70 RSI. So tomorrow, if we get up to the 70 RSI and then close back below it, that will be my exit signal. Another exit signal would be if we close below the halfway of this bar tomorrow, or a close below the low. That Nike looks fine right there. And then we're going to buy SPY, our end of the day, buying SPY. So we have about 8 minutes left. So the VIX went back positive. Interesting. And the S&P, or the Dow Jones, went back positive as well. Okay, so that's on the bubble. IWM, I'm going to go ahead and sell that right now. Okay. And okay, all right, so I'm out of IWM. Coca-Cola, that's going to be a last-minute decision. Lockheed Martin, that's a bubble situation. Netflix, let's take a look at that intraday. Well, it's looking a little stronger intraday. I think I'm gonna wait. I have to get out of that in 2 positions. Nike's fine. Let's take a look at the SPY here. Whoa. Okay, so we'll probably wait on that. And then as far as our potentials, Dexcom does not look good. Well, look, it's back above 30, which is positive, but I want to see it close back. This isn't a new range. I want to see it close back in this range, higher than this low here. So I'm just going to mark that off because I don't think, we'll watch it, I guess. Oh, Goldman Sachs. Yeah, I think I'm going to let it go. And the reason I'm not going to take it is because we're at 62.87. 62 is about my max RSI wise. And we've got this third ATR channel here, and we've got this previous high here. So I'm just going to let Goldman Sachs go. Bonds, no. Possible energy. XLE above 67.65. Yeah, it's close. It is close.
Order partially filled. Order filled.
All right, so we'll wait on that. All right, I'm going to go ahead and get out of the Netflix.
Order filled.
All right. And back over here to this Netflix. All right. So Netflix is taken care of. AMD's really close. I think I'm going to go ahead. I think I'm going to go ahead and just get rid of the Lockheed Martin as well. It's just that reversal day there.
Order filled.
All right, we've got that. That was a nice profit. And over here, we've got a sell. Sorry, I'm speaking to myself, but I've done this for 23 years. Okay. So, Lockheed Martin is, I'm sorry, IWM is out of there. Lockheed Martin is out of there. Netflix is out of there. Coke looks fine. Nike looks fine. Let's go ahead and buy our SPYs.
Order filled.
Okay. Okay. Boy, that's going to be tough. It's going to be close is what I mean. Okay, so it looks like we're probably going to have to get rid of AMD. Nike's fine. We have SPY. All right. Looks like we're going to have to sell AMD. We only have 1 minute left.
Order filled.
All right. And then we're going to have to sell over here. And it doesn't look like we had any new buys today whatsoever. Take a look. No, doesn't look like we have any buys on anything, right? Dexcom, no. Goldman Sachs, It's above the 200, but I'm going to let it go. Bonds, and it doesn't look like energy is going to make it. So what do we have? We have 8 seconds left. Whew, we got a lot done there in that last few minutes. So anyway, we're pretty light right now at the moment.
Order cancelled.
Yep, that's the market right now. So currently now, we only have Coca-Cola, Nike, and we bought the SPY there at the end of the day. So that's a wrap on the day. So down day today in my accounts, unfortunately, but you know, that's part of it. You can't win every day, and you really should get used to losing and being okay with it. It's an important part of trading. Just let it go. It stings a little, but you know, by the end of the day, you'll forget about it. So let's take a look here. So yeah, flat over there. Yeah. So listen, does anyone have any questions for me? Maybe you want to look at a particular stock, or you have any questions at all? Just type it in the chat there, and I will be very happy to answer any questions that you have. I do want to point out that I do offer one-on-one personal training during the nighttime via Skype. So if you're interested in that, my hourly rates are in the description of this live stream, and my contact information is in the About section of my YouTube page. So if that's of interest to you, feel free to contact me. And then also, if you enjoyed this live stream and you felt like it was of value, please do me a favor and hit the thumbs up button, or share it with a friend who may be interested, or share it on social media. I would really appreciate it. So anyway, let's see. Bruce wants to look at Ford. All right, let's take a look at Ford. Yeah, it's just a little high. 68 RSI, and it did come off of the 70 RSI a few days ago. Has a dividend coming up.
Order cancelled.
Has a dividend coming up. 6.4%. Boy, that's a lot. That's a lot. But yeah, I wouldn't buy it here. Any other questions at all? Just type in and let me know. Okay, so going into tomorrow, take a look here. So going into tomorrow, we have Coca-Cola, Nike, and SPY, and that is it. That is it. So, all right, well, listen, thank you so much, everybody, for tuning in today. I appreciate your time, and I hope this was helpful to you. And so I hope to see you tomorrow during the last hour of the market. And then before I go, I'm going to run the U.S. government required disclaimer here at the end. So anyway, let me see if there's any last questions. No. All right. Hey, thank you all so much. Appreciate it. Hope you have a nice evening, and I hope to see you back tomorrow. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor, or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.